Not every product in the market is backed by collateral, yet almost everything in the market finds buyers. Some of them are bought because of the brand name or the endorser. Somewhat similar is the story of debentures. Hello everybody, I am Vaishnavi and welcome to aliceblue Online. Today I will be talking about a very important financial instrument called debentures. The instrument is somehow less talked about because of shares and bonds, but it is no less of importance and can be used to great advantage. Let's try to know more about the world of debentures. What are debentures? Debentures are a type of debt instruments just like bonds. However, there is one crucial difference. Debentures are not collateral backed. This means they are not secured by collateral. Since this is the case, the value of the debenture depends on reputation of the company or the party that has issued the debenture. Now, any company or a government can issue the debentures to raise money. Debentures carry a fixed rate for the investors and they are by nature long-term investments. Companies which have good credit ratings issue debentures to raise money instead of bonds which are backed by assets. The reason is that a company would not want its assets tied up in a legal contract unless absolutely necessary. However, they're important for the investor to note before investing in the debenture. If a company has issued debentures, it may be that all its assets are already tied up as collateral in other borrowings. This can deem a debenture risky. Let us look at the features of debentures. Debentures are a fixed rate, low risk investment avenue. Since the issue, government or company has credibility. It is a preferred investment because of the almost certain returns. Regardless of profit or loss, the company is required to pay the amount of debenture holders at the rate of interest decided earlier. Debenture holders, that is the investors, get preferences over shareholders when payment is due in case the company goes bust. Despite not having the right to vote in the company, the investors can avail of legal avenues in cases of financial fraud committed by the company and get their returns. Now let's talk about types of debentures. There are several types of debentures in the market. The first one is secured debentures. When a company's debenture has the backing of the assets of the company, it is called a secured debenture. The security can be some fixed asset of the company like factory land. Such debenture is called fixed charge debenture. If the security is a generic asset, then it is called a floating charge debenture. Furthermore, they are classified into preferred or first mortgage debenture or second or ordinary debenture. First mortgage or preferred debenture. The obligations of these debentures are met first at the time of realization of assets. Second mortgage or ordinary debentures. These debentures of the company are serviced after settling the first mortgage debenture. Moving on to unsecured debenture. Such debentures do not have any backing of the asset of the company. They are issued by a company purely on its goodwill and creditworthiness. The next type is convertible debentures. These are mixed financial instruments that have the advantages of both debt and equity shares. Investors who own convertible debentures can convert their assets into stocks. Such conversion is done after a certain period of time in accordance with the terms and conditions of the contract with a specific ratio. They are further classified into partly and fully convertible and they behave as their name suggests. Moving on to non-convertible debentures. As the name suggests, the issuers, that is the company or the government, do not allow the holders to convert the debentures into stocks. The next type is redeemable debentures. Investors can redeem their debentures on a predefined date as set in the contract. The issuer is legally required to fulfill this obligation. These are called redeemable debentures. Moving on to the last type, that is irredeemable debentures. Just the opposite of redeemable ones. There is no set date for investors to redeem the debentures. They are redeemed when the company liquefies or according to any conditions set in the contract. Such debentures are not sold in the Indian market. Now, there are a number of advantages of investing in debentures like debenture holders get paid first in any case, hence making the investment safer. A higher credit rating improves the safety quotient of the instrument. It is a good tool for long-term investment as the charges are not high. It assures fixed and sure rates of interest for investors. It has to be paid before the dividends are issued to shareholders. Well, there are also a few drawbacks. Since they have to be paid no matter what, it can force a company into insolvency as well. Hence, only few strong companies issue it. No voting rights in the company. Debenture holders do not get any voting rights. As it solely depends on the creditworthiness, checking the creditworthiness of every company is not easy. Well, that's it for today's video. I hope that it has given you clarity about debentures and how to invest. For more such informative videos, make sure that you're subscribed to aliceblue online. This is Vaishnavi signing off. I will see you in the next video.
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.